Hey guys, Darren here. Thanks for joining the Stock Option Market Weekly Update for the week of May 27th, 2024. Actually, the 27th is Monday. It's Memorial Day, so the stock market is closed. Thank you, veterans, for all that you do and for having served. And we will start the week off Tuesday, but I still want to get the meeting and the video out this week early so that you can prepare for next week. We are going to cover where we are in the S&P 500 year to date, what it looks like going forward. We're going to cover the different sectors and how they performed last week and where they are year to date. And then we're going to jump into the trades on the option trading platform. Before we get started, if you appreciate the time and effort that goes into making these videos, if you can do me a favor and reach down below, hit that like and subscribe button. We want to get the video out to as many people as possible, and that really helps, so I appreciate it. Thank you very much. I think it's super important that we understand the rules, the tools, and the strategies that the rich are using to get richer. Then we can use those same tools and strategies to profit for ourselves in any market. Be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks alone outright. We also have a paid course that's extremely reasonably priced as well in the link below if you want to dig in deeper into the options. Use the link below and open an account with Moomoo. You can get 1.5% cash back or free fractional shares of stocks for opening an account with just 100, and you get more if you open with $1,000 deposit. I recommend 1,000 so you can make a few different trades. Moomoo is a zero commission brokerage, and it has free charting software that is outstanding and I use to this day. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. All right, guys, let's take a look and see where we are at in the S&P 500. So we started the week at 5303, and we ended up just about almost exactly where we started at 5304. So look at all this up and down through the week just last week. So kind of shows you that the market is pretty volatile. We got all the way down to 5256. Year to date, we are at 5304, and we started at 4743 at the beginning of the year. So we are up 10.5% year to date, pretty good amount, and the PE ratios are at 20.7 right now, so a little bit high versus the 17.8 10-year average. As far as the economic calendar, let's look. There wasn't too much last week. If we look at last week, we had existing home sales that came out, and we had new home sales as well. Existing were 220,000 expected. Oh, this is jobless claims. Sorry, on Thursday, jobless claims 230 came in at 215. And then we had manufacturing PMI numbers. We had durable goods that came out. And here's existing homes, 4.21 million expected. We came out with 4.14 million, but not a lot of move last week due to the economic data. But this next week, we've got PCE coming out down here on Friday. And that's the big one, personal consumer expenditures. It is expected to be, let's see, year over year, 2.7%. Core PCE expecting 0.2%, and year over year, 2.8%. So those are the numbers that we're expecting this next week. As far as the Fed, he's been talking higher for longer, and now we see that it's not until November that there's a chance of a quarter-point rate cut. In September there was a chance, but it keeps getting longer. Now they're saying it's going to stay at 5.25 to 5.5 in September, and according to the numbers, that's everything we see as well. But again, maybe a rate cut in November. There might not be one at all this year. It might move out to January, but we'll have to see. But we definitely know it's going to be higher for longer. Looking at the FactSet earnings insight report, we've got earnings growth for Q1 at 6%. So that's actually really good. Um, and then if we go to, let's see, I think it's page 13 over here. We can look at the numbers for Q2, 9.3% expected earnings growth and 4.7% revenue growth. And then if we go into calendar year 2024, we're at 11.4% earnings growth and 5% revenue growth, and then increasing even more into 2025. And then finally, I'll jump in. We've got the Fear and Greed Index. It's right now at 53, so pretty neutral. It's down from 65 last week. So things are becoming a little bit more normalized. Now, if we jump into the trades on the Tastytrade option trading platform, the first one that we have is Airbnb. I've actually got another one in here ready to go at 145, 140. So I'm getting a trade ready for Tuesday when the market opens. And it's a $5 wide. I'm looking to collect. Actually, the market price is $2, so that's pretty good. It's more than a third the width of the strike. 166 would be a third the width. But I'm going to see where it opens. I put my limit order above the market right now, but 145. If you look at the chart, let's see, this is the 1 year. Yep, the 1 year chart, and you can see it's down, but Airbnb's got a great business. They beat on May 8th. They beat on the top and bottom line, but they guided lower. So there was a drop, but they've got active listings grew like 15%. They've got 4.2 billion in free cash flow with a 41% margin. So it's actually incredible. My target for Airbnb is, like 170. So it's much higher than where it's at right now. So I'm looking to put another trade on there. And actually, if we look at where we are right now on the curve mode and then analysis, you can see we're profitable above that 145 and in good position right now. So just adding to that position. AMD, same situation. We're profitable all the way down to below 150. We're at 160 right now. My target for AMD is much higher as well. We're at 166. It's down from 164 last week, and IVR is 18. Again, the higher the IVR, the more that we can collect in option premium when we're selling options. And I generally like to sell options in order to collect premium and let that time decay work to my advantage. And the only time that I'll really buy options is leaps, long-term leaps options. So AMD, I'm staying long. There's been a big drop, I think, yeah, March through May. There was a downturn in AI, but now it's picking up again and people are interested and the prices are super attractive. So like I said, my target again for AMD is much higher at 180 to even 200 on AMD. So I'm going to stay long. Generally, once we get inside 21 days, so at the end of this week, I'll start to look to roll from June to July and collect more premium. Amazon, same situation, a put spread. I'm long. They're a monster company. My target's 225. It's at 180. They beat earnings on April 30th, top and bottom line. I've just got a small put vertical spread on, so I may look to add to that as well on a down day. But again, IVR is low, so it's tough to sell premium when IVR is that low. But we're profitable above that short strike of 180. And just in the last 30 days on AMD, made 70 bucks, but on that trade or on Amazon. Costco, we're at seven. We've got a put spread on again, 765 to 760. It's actually been up. It's up screaming. I think they've got earnings. Yeah, let's see when our earnings coming out right here, 5:30 after the bell. We're at 5:26. So that's next week. Earnings are coming out. What is that? 27th is Monday, 28th. Uh, so it looks like the 30th is Thursday. Um, Yeah, no, 27th is Monday, 28th, Tuesday, 29th, Wednesday. Yep, 30th is, so it's after the bell Thursday. If you're going to put a trade on, you might want to do it before the close on Thursday. Um, I'll take a look at that as well. But we're at the 760, 765. We've already made, actually 84 on this trade, 82 left. So I'll look to readjust that before the earnings announcement, probably, maybe add more. I think it's going to do well. DraftKings is the next one. We've done really well in leaps options. We've got a long, deep in the money call, which is a leaps option at 30. So we make money as that stock price moves up. And then we sold a 42.5 call against it. And DraftKings has been kind of a cash machine for us. It's just been generating a lot of money over the last year, 365 days, over $3,000 just trading, against this leaps option. So I'm sure I own that basically for free. It's paid for based on all I've collected on selling calls against it. But that's going to be my strategy in DraftKings. I just sell poor man's covered calls. So long-term deep in the money leaps, and I've got a video on it if you want to check the videos. But a leaps, and then you can sell a call against it and can make money month after month. GDXJ, gold miners, it had high IV. It's at 43 IVR right now. Stock price is 44. And where was that last week? It was at 46, so it's come down a little, which is good because then it comes down within my range. So GDXJ is a trade that we recently put on, and yeah, we're profitable. Here's where the stock price is at 44, and as long as we stay below that 47, 41, we're profitable all the way down to 40 and up to 48 based on the premium that we collected. So I like the gold miners. They've had a run up, but I think they're going to continue to be strong for quite a while because the rates are going to stay high longer. And gold is the other one, GLD, same situation. We're at 215, so it came down. It's at the bottom end of my range now, it looks like, but we're still in that profit zone. So it had high IV. It's at 53, 215. It came down from 223, so it was up testing the call last week. So it does kind of move around, and that's the volatility that we have here. So I've got a couple of the gold positions on, and then with Google, I'm generally long Google. I think they're a monster. I added a call spread on a big up move, but now I'm looking to add another put spread as Google's, yeah, it's been moving up. This is a yearly chart, so you can see where it's moved up. But again, at 175, my target for Google is like 200. So I still expect it to continue to move up, and I'm going to stay long Google. Just in the last 30 days, we made almost $1,000, 935 just in the last 30 days trading Google. L3 Communications, great defense company, lots of good products. It's done really well. We're still in that range, 223, so we're right between. We've got an iron condor on the 210, 200 put spread, and then we sold the call credit spread, the 230, 240. And you can see on the call credit spread, we're profitable when it goes down, put as it goes up. So this is our huge range that we have, all the way down to what, 206 up to 234, huge profit range. And we just continue to collect premium. We're up big, $288 on this particular trade, and we've still got $62 in premium left to collect. And yeah, just in the last Yeah, last year we've made over $1,700 trading L3. Netflix is another one. Iron Condors. It's done really well for us. I like Netflix as a company. And let's see where we were at 621, and now we're back up at 646. 621 just last week. What was I looking for? The chart. Yeah. So we moved up big just recently. And you can see I've kind of got a channel charted. So we're trading within a channel somewhat. I expect us to continue to move up that way. My target is 620. Actually, we're above my target. So we're actually right on, pretty much on target. But you can see we've got a big range to be profitable within. We're at the upper end of that range right now. And you can see on the chart we're at the upper end. So I'm okay with that. And Netflix has done really well for us. Yeah, almost 3,000 over the last year. ServiceNow, great company. Similar situation with um, the Iron Condor. Huge profit range. We're right in the middle, so we're in good shape. We're trading both sides with Iron Condors. I've got two tranches, so I put two different Iron Condors on. Sometimes I'll do that if I test one side of the Iron Condor, then I'll put another Iron Condor on in center in order to collect more premium. But we've still got $738 in premium left to collect in this 26 days. So I suspect that this will come in a lot. And yeah, I think we're kind of in a range right now, kind of range bound. There's no earnings. They came out with earnings and they beat and guided in line. And again, the stock dropped. I can't believe it always does. But anyway, I like trading ServiceNow. And it's a great company. They come out with, it's a cloud service company, and they have a lot of different software to help businesses grow using AI. NVIDIA, they had earnings last week. They crushed it and did well. I've put on position, actually an Iron Condor, 930, 1240. So huge range because IVR was high and collected a good amount of premium. But let's see where we're at. Yeah, we've got a huge range right here now that we're profitable within. Um, and IVR will come down now that they came out with earnings, but you know they're way up here high. So I don't think because they came out and they beat and everything's looking rosy, I don't think they're going to drop a lot. And they've increased in price so much that I don't think they're going to move up too much. So and we've got a huge opportunity to stay within that range. So that's why I like the Iron Condors. UiPath. This is a high flying tech uh, stock. It's software for robotics process automation. So I like to watch it. I have a poor man's covered call on the 20, and then I sell the 21 calls against it. So I suspect this will be kind of like DraftKings and hopefully just print money over the next year. We'll see, month after month. Palantir, same sort of thing. I do a long-term leaps options. I sell a call against it. So you can see I'm either doing put spreads or leaps options for the most part, or iron condors if I think it's range bound. So I like sell premium, but then buy if it's long-term leaps options. Palantir, we've done pretty well in 750 over 365. Just in the last 30 days, we've made 200 bucks in Palantir. But you can see that we've got the 23 call and the 20 leaps option on in Palantir. My target for Palantir is about 25. So we're continuing to move up slowly. SoFi, this one's the one that's kind of hurt me, but I love the fintech company. It's my fintech, but it's just I guess there's more competition coming out, but I'm holding it for the long term. Lots of partnerships. They're profitable now, so I suspect it's going to do well in the long term. I'm going to stay long. You can see all these different leaps options I have, so I'm kind of waiting for a big move up. Hopefully it comes. SoundHound. AI company. I just threw it on real small just to kind of watch it. I'm kind of interested in it. Um, so I don't know that I'd recommend this one. It's kind of a high flying tech. It's one that Kathy Wood likes, and it's an AI voice technology company. So I'm not going to talk too much about it. Square, uh, they came out, they beat earnings, but the stock didn't move, and it's been down. But I'm staying long. I think at some point this is going to start moving up. They're too good a company. But I did sell the call against it, and you can see I profited off that. So um, we've done okay. Last, I thought we did. Maybe, yeah, only $100, only over the last year. But hey, I'm going to stay long. TLT and TMF, I'm a little too early. Interest rates higher for longer. As interest rates start to come down, these will, their bond funds, they will do really well. I was trying to find. So TLT, you can see the chart. It's down at lows. Same thing with TMF, down at lows. As interest rates come down, um, the value of these stocks will increase. So it's kind of there as a hedge to offset my other long positions. Um, Next one is Verizon. Um, it's got a huge dividend, solid company. It just stays around that 40, hovers around that 40 trading range. Look at, it's been doing that since the beginning of the year, December, January. It's stayed between that range of 38 to 43. So iron condors would work here, except IVR is low. And this one has a huge dividend. So that's why I just own the shares outright and collect a 6%, 7% dividend and then sell calls against it and collect on that side. So that's my strategy with Verizon. ExxonMobil, it's moved up. You can see the different ranges, but it went up to 123. Now it's back down at 113. So um, I like to actually right now I've got an iron condor 115 to 120. This is perfect because I am long oil with our current situation and not pumping oil. Um, I think oil is going to remain high for a little while, but 115 to 120, and we're within that profit range. And on ExxonMobil, I think we've done pretty well. Let's see, 700 over 365, 189 in the last 30 days. So that's it for the trades that we have on right now. Let's look at earnings coming out. If we search here, all earnings, and then we can sort by the date. And so we've got 27, 28, 29, 30, 31. So through the 31st. So let's start at the bottom. Okay, through the 30th, down here. All right, big ones. We've got Dell, the 30th after the bell. We said that's Thursday, yep. And then we've got the ones that I would look at for earnings would be, yeah, Dell doesn't pay a lot, so I wouldn't. Marvell's a good stock to trade options on, like the company. It's Nordstrom's, Ulta. Ulta's tough to make money on. Wow, Ulta's down 381. Oh, we've got Costco next week, and again, I'm long Costco. I think they're going to do pretty well. We've got Kohl's, so another retail coming out. Dollar General is a big one, and UiPath, okay, it's got earnings next week as well, and then Salesforce. Salesforce will be a big one that can affect the market and tech. So that's it. All right, guys, I put a link down below for that free options workshop. Be sure and grab that. Open an account with Moomoo. Get your cash back and free stocks. Remember to hit like and subscribe. Let's get the video out to as many people as possible. Leave a comment, ask a question. Let me know. I answer every one. Thanks for watching. I'll see you in the next one.